The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me. And, of course, me at the appointed and sacred time.
The following takes place between 2 p.m. and 3 p.m.
So, what do we have going on today? Of course, as we said, China was closed all week for the Lunar New Year. They will open up on Sunday night, which is their Monday. So, well, they've got a whole week to make up for. So we'll see just how much of a gap higher that they have. I've had a theory that maybe a lot of the money out of China came over here so that they could hedge or trade during the week that was closed in China. So I'm watching very closely to see if we don't have some kind of big sell-off right before the close today. And that would give me a little bit more belief that maybe that theory is right. So we've got that Fed meeting announcements on Wednesday. It's actually Tuesday and Wednesday. Not uncommon to see very light volume. Normally, we'd start seeing the evidence of fund buying. That's probably going to be a little tough until the Fed is done. Generally, those fund buyers don't like to get in front of the Fed and buy anything. My guess is that we get a very sharp pullback at some point early next week. And after that, we'll find out what the fund buyers actually want to buy. Other things going on that I find interesting, Samsung phone sales numbers are out. It's the biggest quarter-to-quarter drop that they've ever had since they started making cellular phones. So we can probably apply that to, especially since they're rather large in the high end. Can you apply that to Apple? Well, that's interesting. Very interesting today is how many people are out pushing the narrative that Apple is recession-proof. It is up about 1.6% today. But again, part of the problem is it doesn't really matter when you're that massively short a lot of these big stocks, which everybody keeps going after. As I said often, you want to be shorting these when they quit shorting them. Now, for Apple, it's pretty common to see numbers somewhere in the neighborhood of 15 to 20%. That would be kind of on the large side. For the last, yesterday, 25, almost 26%, to almost 28% the day before, almost 28% the day before that, 27%. We had one day where we had 18%, which is kind of normal-ish. Right back to 30%, 20%, 20%, 23%, 30%. We get these kind of spits and spurts, and it doesn't matter which stock it is. On Wednesday, we had Microsoft shorted by 35% or 34%. And, of course, those numbers come from FINRA, and they don't tell you how many people covered before the end of the day, but that's how many trades were initiated as short positions. I think you can infer, much like Sherlock Holmes inferred, the dog that didn't bark meant that the dog who always barked at people that he didn't know, he didn't bark, so the dog had to know the person that came in and was the killer. You can infer, I think, that these heavily short positions, some of these people are going to hang on. When that stops or when that pulls back, I think you're going to see something. Now, on Tesla, we talked about what I described as a biblical level of short selling in the 40% range, as high as almost 45% on the 24th. It's going to take a while for those people to give up. They don't learn real easy and fast. They've got to have been kicked in the teeth a few times to come back at a stock like that many times. The good thing is, if you do want to short it, when they do give up, there's probably a pretty good gap down that is going to come. But also, I just really, after a big gap up, I really don't like doing anything before 3 days. I actually run the numbers again on Wednesday night, and they still hold up. And that is, if you're going to gap up or gap down, your chances of making money are fairly tough. You're going to maybe make money doing the opposite side of the move, or the big move, about 20% of the time. So I've got to have a pretty much an abiding belief that I'm going to do something. I kind of think of it the same way as somebody that's going to jail for 3 years for burglary and some guy that's going to the chair, old Sparky down here in Florida, for murder. The actual level of belief doesn't have to be, more than 50% on these things. They do need a much higher level of belief, and I played some of them. Generally, the only way I play them are options, so that if I'm right, I'm massively right, maybe 5-10 times being right. But that is a very tough road to go. Anyway, you can email me at path@tfnn.com. You can put message in the den. And, of course, you can always call at 877-927-6648. Again, volume week, we'll continue to push higher and higher. As most markets are, you can stretch them like a rubber band. The more you stretch them, the more that when they do snap, they will hurt. But generally, you can actually look at volume, to tell you whether or not that stretch is far away. Okay, I'll send you a link. Where do you find the short data you're talking about from FINRA? We got a little bit of time, but in, I think it was 2007, there were a couple of changes that came into the market. The first one really kind of allowed high-frequency trading. The second one called on them, on FINRA, to actually collect short sell data every day. Now, again, it doesn't tell you if they covered those days, but you will see how many trades were initiated by a short position. I'll try to get the link to you. Anyway, they separate that into all the different categories of the market, so you kind of have to add up 3 different spreadsheets. I made a database to do it and been covering it since they started it. So I have a pretty good library and kind of know just from the history how much each individual stock is shorted and what is a high value short position on it. Anyway, we'll be back in a minute and we'll do a little history and then we'll look at the movers today.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month and try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors. Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And let's see what we have here. We'll go back to this. Okay. First question. Oh, we wanted to do a little history so we can move on. We'll do that.
Just a little bit of history repeating.
In 1994, on this day, Silicon Graphics co-founder Jim Clark leaves the company to start Mosaic Communications, the operation that later became Netscape Communications with Netscape co-founder Mark Andreessen. One of the guys in my computer group, who was, when I knew him in 1991, was Mark Andreessen. I didn't know him well. I knew him enough to bump into him a few times in the supercomputer facility, but he was deep into this stuff already. I was busy with my stuff, so I didn't have a lot of time, but I did know who he was and what he looked like. Years later, and I think it was 1993, or actually 1992, I had changed jobs, moved to Cincinnati, and started going and taking classes at Stanford during the summer, or basically sabbatical to keep up with a lot of the stuff going on, especially in computer graphics. Clark kind of pulled me aside in late 1993 and told me that there wasn't a future for him and Silicon Graphics, mostly because he had the exact same problem that Steve Jobs had. And that is Steve Jobs in 1986 wanted to start licensing the operating system and not selling computers because he saw that really it was a much better business model for like Windows, and that he'd never be able to be a one computer company and make the same kind of volume and get the costs down that a Windows PC could. So anyway, he told me that, and I was working on a product for a Silicon Graphics indie at the time. That was kind of like their starter PC, and thought we could probably do that. As soon as he told me that, I gave it up. So he ended up being, I think, in 3 big companies: Silicon Graphics, of course, Netscape Communications, and I forget the one that he went into in the mid-2000s. But the guy is he's kind of like Steve Jobs. He had a lot of different successes and different products. Kind of a little lower than a Musk kind of entrepreneur, but very sharp guy. Anyway, he helped popularize the World Wide Web by distributing the company's browser for free and leaving a company that was really starting to sell a lot of machines into finance. So he didn't leave it in the lurch, but he kind of knew, like a lot of people knew, that there was no future in selling computers. The money was in making operating systems. And today, they are, of course, long gone, but Macintosh, Mac operating system account for about 4, maybe 5% of the entire market. Until you change that kind of paradigm, probably never going to change. And, I think in my life, if I said I spent 30 minutes with Jim Clark, that would probably be on the long side. He just saw me around on some of the stuff and knew what I was working on, would ask me questions every once in a while about what we did. But that was it. My little brush with huge success, and 2 kind of, I'm going to say, what would you call, titan of the tech industry. On this day in 1994, he was smart enough to give it up and exit stage left. Okay, so what else do we have out here? Okay, let me update that because that's not updated. I know that. Got a couple of questions already. Trying to remember what they were here. Okay. I had a couple of people. I don't know if these are where these are, but we'll go ahead and take a look. Okay. First question was about shop and where it's headed. You are breaking through the previous highs with no volume. You did have a nice big volume day as you did it, but you only have 2 days now with no real follow through. And you've got maybe another day or 2 to see whether or not this is going to stick. But I would say, you were looking for something on this huge gap down day. See if I can find it here. That day had 113 million shares. It's on May 5th of 2022. And, of course, nice volume day out here, but basically you're breaking that with 59 million, and now you've got 2 days to follow it. It's kind of like the rest of the market here, which is we've got a lot of hang time on a high, but the question is what happens in the last couple of minutes today and on Monday, whether my theory of everybody pushing cash into our market, why China is closed. Okay. Okay. Intuit. INTU. Take a quick look. I think I got to everybody, didn't I? Okay. And the miserable problem is once you leave somebody, you can't remember who you were clicking on. Oh, now it went away again. Let's go back to that. Okay. Okay. So we've got Intuit, and we've got got enough time here. Okay. 415 calls. You have a big deal. You broke through it. You got half the volume you had yesterday. You're really already into candles with 3.25 million shares. Yeah, would I take the cash? Yeah, I'd take the cash. And, I don't know what it did intraday. I could go back and look, but you'll probably start seeing a lot of the premium come out before the end of the day. So, yeah, I would say that there is a 30% chance that you retest the $441.98 high. But, that's, so there's still some decent odds you get a little bit more come Monday before it rolls over. But I'd go ahead and take the cash today with the decay coming over the weekend. We'll be back in a minute.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
And hopefully we're back. I didn't hear anything on that. So hopefully we're back and we're live. Let's see what else we have here. Okay. Okay, look at a few things. Let's look at the big movers for the day here. Okay. Let's see. Okay. Applied Materials, as we said, a lot of these stocks were all right up to previous highs. To 116.09 about 10 million shares on that day. You came into it with 7.7 million shares yesterday, and you kind of gapped down a little bit. Volume's probably going to be a little bit more than it was on that attempt back higher. Of course, a lot of these are either earnings or spin-offs of what's going on in the rest of the market. AMD did gap down lower. It's come back up and engulfed kind of a smaller candle yesterday. Volume is not all that exciting. But again, if you're looking at any of these stocks that tend to be in the highly shorted vein, you're probably seeing a bit of a short squeeze today. Yesterday, 26% in AMD, 31% the day before, 28% the day before. So is this a huge one? No, but there's enough, and it's perennially shorted. So it gives you that idea. ASML, a lot of discussions about what's going on there. They did have a little bit of a gap down on lighter volume. Again, a monopoly, but I think everybody knows pretty much what they are. They make machines that make chips, and no one else really does it quite like them. Some of the discussion is that, though, and one of the reasons they're gapped down on a little bit of volume, is that people are wanting machines for older technology that are cheaper to make more things for cars and automobiles, and older technology, not the latest, greatest stuff. And I think that's a little bit of the gap down in it. AXP had earnings, what was it, last night? It certainly looks like higher interest rates are now starting to turn the tail of the tape. You have a huge gap, you have huge volume, and you blew through the May 31st high of 170 and the August 15th high of 166, both with twice the volume. So a very good day. You really would love this to come back to around 170 and look for bigger moves to come. Charter Communications, another one out here testing the previous high. You did have more volume. It pulled back into the trading range. Again, this just looks like a very tired market for a handful of stocks other than those massively shorted. To Colgate Palmolive, big dragonfly doji on the way down today with lots of volume. Really don't want to touch this again until you go retest the low of 67.84, which is the October 10th low. With 10 million shares already, there isn't much to say other than this is just probably going to work its way back down until then. FRT, Federal Realty Investment Trust, can't say there's a whole lot there. Last night, Hasbro came in with earnings and whiffed. Again, we're talking about a variety of things coming into it, but both Mattel and Hasbro, probably the biggest change for those guys are streaming and streaming. Short of making some money on the Baby Yoda, movies have not really spun off a lot of the toys that they had for the last really, what was it, 1980 or 1977 with Star Wars. If you don't know the Star Wars movie, basically the director, who had become rather famous for a lot of movies and producing movies, decided that to get the money he needed to make Star Wars, he would give up all his directorial and backside of the first movie for just the rights for the toys. And he ended up making, I think, 3 times more than he would have if he would have actually just kept the cash and they would have funded the whole thing. But he showed them actually how to turn these movies into a earnings monster with the toy stuff. That is really kind of going away. We've got many changes in media these days. I saw the new ratings for cable, which are pretty horrible. Cable news, there's only one of the 3 cable news networks that's even making a little money. I think the other 3 are all losing money to a little bit or a massive extent. We may have turned the corner on cable TV, I think, short of being in some places where you don't get a good signal. And now with streaming, the need for terrestrial broadcast and kind of its adjuncts like cable television are kind of fading away. And I think this is going to be a big year for a lot of different changes. It's going to be a red pill year for a lot of different things, kind of like 1972, 3, 4 ended up being a big change in societal evolution in the United States. I think we're kind of set up for the same kind of thing. And we're going to see a lot of twisting and turning of that stuff. But I think for the ratings now, you can't get more than 300,000 people between 25 and 55, which is the one that the advertisers want, because that's the people that spend money. Once you get to 55, you become a miser like me and don't spend anything. You hang on to that nickel for all it's worth. And I think we're probably going to see big change in that. Not everybody's watching the same thing. Certainly, they're not enamored with it. Star Wars has done everything. Disney has done everything it can to kill off Star Wars. And if it wasn't for the Mandalorian, it probably would be dead. No one would come back to actually watch anything. So watch Hasbro and Mattel. And unless there's a big movie, I'm wondering if these guys are ever going to do anything but do some dead cat bounces off the bottom. Okay. What am I correct about? We'll be back in a minute.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
And I'm working on the Tech Insider today. I'm starting to write about competitors to Chat GPT in the newsletter today, so that you'll know what's coming. Of course, we had a bunch of stuff going on this week with the return of the original folks to Google as they look to go up against AI, against their page rating for some of their stuff. But it'll be out here in about an hour or 45 minutes. HC8 Healthcare, certainly you did move down. Now you kind of back up. It's again, you don't have a lot of volume. There isn't a lot in this. Someone asked me about Intel, if it's ever coming off the ground or off the floor. You gapped all the way back down to the previous gap. You got huge amounts of volume. I think, what was it, 2017, 2018, I was a little late to the party, maybe 6 months, in understanding just how bad Intel had gotten internally with the political infighting and actually politics over actually making a product. It came to fruition with them getting rid of their CEO for actions he'd taken 10 years earlier that no one was complaining about. And then, of course, you had the Dumbo that actually forced him out, hang around for 2 years and get a bunch of cash. And, of course, they fired him unceremoniously because he was a bozo. And, I mean, you can just go on, but Intel has lost its way. It doesn't have a good CEO that can tell everybody to have one in the chamber, and that one would be a filthy word. And anytime someone tells him to do something, he probably should fire one of those off and tell them to get out of their way. The problem is you just don't have anybody that's strong to come in, and you have a crappy board also. So I don't know if there's a whole lot you can do with it. I don't think that there's a lot of change now that they can implement. You know, they got some free cash to build chips here in the United States, but I still don't see anybody new coming in there, firing all the people that have come in the last probably 10 years that are more interested in a lot of things that have nothing to do with making chips. We'll just put it that way. So I don't see anything that changes. But you're down at the bottom thing. Just kind of looks to me like you've got lower highs and higher lows at the moment. You go back and test 25, 35 eventually. 877-927-6648. Yeah, you get behind, there is no bar. Andy Grove, the big CEO of Intel, had a big sign on his desk that said, if we don't eat our own lunch, someone else will. And that's exactly what happened. They decided to skip a generation and start working on the next generation. And then when that generation of chips came, they decided to work on the next one. And they never got anything that actually works. And now they're several generations behind. Let's see, what else do we have out here? Clack, take a look at it. I think a lot of these things are a little bit of spin-off from Intel and others, but Clack gap down with some decent volume out here. Support probably comes in at about 355-ish. So we'll see that. ROL, Rollins, not much going on with that. And of course, as we said, it's kind of tough with some of these bad ticks that we had this week. But let's update this. I don't know why that keeps saying the gold fields. It's Visa. You really have a nice move for these companies, and it does look to me like credit card people, for the economy, probably a bad sign to see exactly what MasterCard and Visa are talking about, which is people taking on debt a lot more than they probably more than they should. That is a buffer in the short term. In the long term, it tells you that there are bigger problems coming. Old Click and Clack, yeah, made a lot of money on those over the days. Okay. There's nothing like those buckyballs that Click had. And if you don't know what buckyballs are, you have to, there's little tiny fine wires, almost, smaller than a human hair, that come out of chips. And you've got to solder those back onto other things, including the chip. And they had made all this kind of specialized stuff that was really good for soldering the little wires that went to the silicon to a bigger piece of metal that then could be plugged in or soldered on or a bunch of other stuff. But the old buckyballs of Click. Anyway, nice pop out here for Visa. And as interest rates continue to move and people start to use credit cards like they did this Christmas, much better off. I suspect, at least from what I've read in the press so far, now that gasoline's starting to go right back up to the highs, which I think it will, certainly starts to look like it's headed that way once again. You're going to be seeing a lot more of Visa and MasterCard in the headlines. It does seem like we've gotten to the point where the money that people had set aside is kind of gone. We're starting to use money and credit cards, and eventually that money will be over, and that's probably when we're going to get a real taste of recession. 877-927-6648. See. Okay. Okay. The old buckyball. Okay. Okay, thanks for all doing my horn. Okay. What else do we have? Oh, let's go back to the usual suspects as we just have a couple of minutes to go and then wrap up the show in the last segment here. MSFT, if he types it correctly. And, man, this is what makes me think we've got some real problems in River City. And I will be getting a lot of sleep into Sunday night, because you got some fairly nice reversals out here, but these things are already back up to the 618 retracements and maybe even a little bit above them, but man, the volume's poor. We'll be back in a minute.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we get ready to wrap up another wonderful show here at TFNN. Question is, where would you enter on the ultra short QQQs? I mean, you're pretty much at it. You're in a move higher, candle higher from the August 26th of 2022, 166 million shares. Got into it you bounced off it with 180 million shares back on December 13th. Now you're back in it with, we got about 100 million shares so far. So, I mean, you're pretty much here. If it doesn't, it's probably going to blow through the lows. And we do have some kind of move back up to maybe 4,500 on the S&P cash. I don't see it. Again, just a handful of stocks and huge short squeezes out of these and lots of distribution. If you get my newsletter, you know what I'm pointing at in what I think shows that the big guys of the street aren't buying anything and they're actually dumping as much as they can. I don't know who's buying all this stuff, but it's certainly not the people on the street. So what do? Well, we wait for Sunday night. But I think Sunday night and next week may be some of the biggest volatility we have in a long time. I think there are a lot of people that need to be red-pilled on what the Fed is going to actually do and why they keep on trying to talk themselves into no recession and no pain. I don't think that actually ever exists for massive inflation. And of course, my theory has always been that 80% of all inflation has come from the price of gasoline in the United States. That going back up higher tells you a great deal. So when you can, not when you have to. We will see you here Monday, bright and shiny like a penny.
Building wealth trading in the stock market seems impossible.